Still in the studio today to give me their perspective on the outcome of this MPC meeting is Nnamdi Nwizu, co-managing partner at Comercio Partners, Bismarck Rewane, CEO at Financial Derivatives, and Muda Yusuf, the Director General of the Lagos Chamber of Commerce and Industry, who the Central Bank Governor actually mentioned in his address there, taking questions. So I perhaps would like to start with you, Muda, to respond to the Central Bank Governor's comments about your advocacy around what I think you called earlier, perhaps over-regulation,
yes,
regulatory risk.
Yeah.
Can you just speak to the point, especially concerning what had obviously became a big issue at the meeting, the importation of milk and the Central Bank's position on that? The Central Bank obviously at a stalemate with the milk importers. The milk importers are suggesting that they would not backward integrate. The Central Bank saying that it is unacceptable, that they must backward integrate. Can you just respond to that?
You see, in managing the economy, we should define the roles of each player in the economy. It is not, I don't think it is fair, to expect those who are in the business of producing milk to not take on the responsibility of taking care of the herdsmen, the pastoralists, and all of that. Of course, it is good to backward integrate, but we need to have policies in place to develop each aspect of the economy. Of course, there is no sufficient investment in all this animal husbandry and all of that. That is different from those who are in the production of milk.
But I think he's suggesting that the Central Bank will support that.
You can support them as a separate business. We can have an agreement of, for instance, to say, okay, whatever is produced locally, it must be ready to offtake it. That is fair. But to now put the responsibility of having to go and be rearing cattle, buying grasses, taking care of pastoralists on the shoulders of those who are in the production of, I don't think it's fair.
All right. So
and the issue here is that, this is even the broader issue. It's about the shock of policy on investment. Because what I've seen over time is that we don't take proper account of the cost of some of these policies. Of course, there are benefits, there are costs. But in my view, the costs, most of the time, outweighs the benefits. Because you already have an investment. These people have shareholders. And suddenly, you just say that the key raw materials they use, they will not have access to it. I don't think it is fair. It has happened. It happened in the palm oil area. It happened. I'm hearing, something similar has taken place in the textile area. Now we are coming to milk. Right. Who knows where it will go next?
If I can play intermediary in this conversation, what I sense, because it does appear that this conversation, there is a stalemate here. The Central Bank is saying you must backward integrate. The importers are saying we will not backward integrate, according to the Central Bank Governor today.
The point is that integration over what time period? The animal husbandry, the dairy business looks for lactating cows.
They don't necessarily breed them.
No, they're not here. So the cost of a lactating cow is quite significant. The infrastructure required to do it. So if you're going to have a set of incentives to start that process of lactation, then the milk, the cheese, the butter, and all of that, it's a whole new business. Should the importers stay for 60 years without doing anything? No. But the incentives, the packaging, should have been done earlier. We had discussed this in this country over 10 years ago when the Zimbabwean farmers came back here and they brought some land. So Kwara State under Bukola Saraki as the governor did that project. But then, Mr. Alhaji Adwa was the president. I was in the presidential committee at that time when we looked at those things. It's possible, but you got to give them incentives and you got to give them time. And then you take it away from the rearing. But the question of herdsmen and pastoralists is a completely different. So
I thought that was quite interesting that he linked the two.
No, but does it mean, therefore, that when there was no herdsmen crisis, we were producing milk? If the production of milk and dairy is the cure for pastoral crisis, then it means that you have to, if you do differential diagnosis, you find that when there was no crisis, it means that you were producing milk. No. That is not a honest assessment of the situation. The situation is that the herdsmen crisis had to do with aridity. It has to do with the water and deforestation and so many other issues. You cannot pin that on this thing. I do not think that the people importing milk should be importing milk perpetually. We must have a program to do this. But it would be unfair to link those two things, especially when it's a burning issue in Nigeria today.
All right. I thought that was a very interesting point, which obviously was a key part of the Q&A segment there. But Nnamdi, let's get your perspective on the decision. Some were suggesting that we could see a rate cut, but I think overall everyone thought in the worst case scenario, we'll see everything held as we have seen today. Maybe we should look forward now. Given the aggression that the central bank has shown towards trying to make sure that rates come down, and we see a lot more lending in the banking sector, how do you see the markets trending from here?
Well, I think even the central bank governor mentioned it, that even if they don't tinker with MPR, that they still have other tools with which they can more or less push banks in the direction they want to. I think as long as they, first of all, continue to have home auctions, or the special auction as they called it, which is just for client deposits, then you're going to continue to see rates go lower. And eventually banks are going to say to themselves, does it make sense buying treasury bills at, say, 5% or 6% versus going to create loans? The flip side would also be, do I want my MPLs to increase? So they're going to have to find a way to strike a balance, right? Because on one side, you talk about giving out loans, and the other side, you also, the banks need to protect themselves. See, businessmen, just like discussing the milk issue, businessmen will go where the money is. If, for instance, you create an enabling environment for people to produce milk and it becomes more viable than importing, they will produce locally. And the same way, if you create an enabling environment for people to give out loans. So let's even use giving out a loan to somebody who manufactures milk, say, in Kano, and is going to sell its product in Lagos. How is he going to get it from Kano to Lagos? So where do you have the infrastructure in Nigeria? You have to look at it. Monetary policy can't solve all the issues, right? So there's a limit to what you can do. Yes, you can reduce rates to 5%, 4%, but there will still be a limit to how much that can change the tone or change the viability of those companies that you want the same banks to lend to. At the end of the day, you end up seeing maybe the blue chip companies end up being the ones who benefit the most. And the banks will look at it and say, look, if I had to give a loan to X, which isn't such a viable business, I'm most likely going to lose my money. In fact, maybe it's even better for it to stay in Sierra and N0. Or let me take it to blue chip A, who will take the money from me at 6 or 7 versus putting at Sierra and N0, right? So the small SMEs and co might still struggle. Some will benefit, no doubt, right, from this. But the banks still have to check it and weigh and say to themselves, does it make sense creating new loans if there's a possibility that I'm going to lose a chunk of this money? And do I want to have AMCON 2, 3, and 4? Or am I just, are we okay with just...
Let me get your perspective, Bismarck, on that. He just mentioned humorously AMCON 2, 3, and 4. Yeah. But is that a real risk with the current posture of the central bank? Do you suggest that we could be creating another... I mentioned this earlier when I was speaking to the analysts at Moody's, subprime loans. Are we going into that in a very aggressive way right now?
No, there's a trade-off. Definitely, the banking system as financial intermediaries are supposed to take surplus funds to where there's a deficit within a context of a risk architecture. Now, but two things are happening at the same time. There's this loan-to-deposit ratio, which is 57. Basically, the shortfall is about maybe 500 billion to a trillion naira, which is less than 4% of money supply. So the impact is not that significant. But at the same time, there's financial disintermediation taking place. So Dangote 1, 2, 3 commercial paper programs, MTN commercial paper programs, Flour Mills of Nigeria commercial paper, Nigerian breweries, a lot of these corporates who are the beneficiaries of the lending and going to the market to raise money at very attractive rates and paying down the risk assets. So the pressure is coming from both sides. One is the regulatory pressure or moral suasion / coercion, right? Then there's the market force of liquidity. But the downside of a system that is awash with liquidity is risk assets, 1. 2, keep the cash at home. 3, convert it to dollars. Because if I can get 2% in dollars, and the rate of inflation in dollars is 1.9%, and I get 9% for 90 days on treasury bills, where the rate of inflation is 11%, then rational economic agents will make the right decision. On the question, coming back to the question of milk, when you put all these restrictions, there are only 2 people that will benefit from this. The smugglers who will smuggle the milk in, and the custom officers who will help them to do it. So you are just going to perpetuate corruption. So what you need to do is to have an engagement and a time frame with these guys.
So we need to end, if you like, this stalemate.
Yes.
There has to be some conversation.
There's no stalemate. Tell them that, look,
a way forward.
you are given 2 to 3 years to do, and this is step 1, step 2, step 3. I think that's where it's going to, I suspect that's where the central bank is headed. But the central bank is a monetary policy authority. This is actually a fiscal issue. The incentives, the investment, the trade, the pioneer status, the tax, all of those are fiscal responsibilities. The central bank is complementing what I would say is a fiscal responsibility at this point in time. All of these things have to come together and achieve the desired objective. In any case, if the exchange rate begins to weaken, as I think it will with liquidity, it becomes more expensive to import the milk anyway. So, and that becomes an incentive to invest while you provide the infrastructure and the logistics. Because even when you are having dairy, there are certain temperatures, certain things for which you can convert the milk into cheese, into butter, into so many things, and then extract this and then move it to the market.
Right.
There's a strong correlation between protein consumption and intellectual stimulation. So there are many things, benefits for that. But I think we need to move away from the military approach to changing rules.
Sounds quite forceful, doesn't it?
Right. To the military approach to a democratic approach to.
All right. But Muda, if I come back to this point, and we're only talking about milk now, but potentially we can take this conversation to several industries in Nigeria.
Wheat,
there
bread,
is a reason why we import, like you mentioned, wheat. There is a reason why we import so many other things in this country. And Muda, maybe you can just speak to this point. The environment does appear to be very difficult, and there has to be a conversation if we are really aggressive about fixing issues such as excessive importation, like a product like milk. Then we have to address it. I mean, we've seen some success with things like cement.
We've seen some with orange juice, Chivita, and all those guys.
Right. So, Muda, can you just speak to this point?
Well, just as he said, monetary policy cannot solve all problems. And I have a feeling that the way the central bank is positioning itself is as if you can use monetary policy tools to deal with all the problems, and which I think can also be misleading. And we should not also give the impression to the political leadership that this can happen. Otherwise, we will not be able to hold people to account on the fiscal side. Because all this is about building a competitive economy. It's about focusing in your competitive areas in which you have competitive advantage. Now, the CBN was talking about spending $1.3 billion. How much are we spending to import petroleum products? How much? I mean,
it's probably the number one item.
Number one item. And we have refineries. We are not a producing country. Is there nowhere to start from? I mean, it's like you leave an elephant, you are running after a goat. If you really want to solve this problem?
The Dangote refinery and others are. So there is, one can argue that there's a plan there. But it was a product of a fiscal and monetary...
The fiscal agencies needed to get involved for that to happen.
There cannot be... fiscal and monetary policy have to complement one another. They have to be aligned. But at this point in time, we are just getting a cabinet list. So one hopes that when the fiscal team is in place, they will step up to the plate and take over the responsibilities that have been very graciously handled on their behalf by the monetary policy authorities.
All right. If I come back to you, Nnamdi, and another point that I thought was important for us to discuss today is how long can the OMO auction system be used to woo the foreign investors? Because I think one message that maybe did not come out very strongly in today's MPC, but I think is very relevant, is potential pressure on the forex supply side. So obviously there were conversations about remittances, a lot more focus on that. I think it speaks to the need for Nigeria to make sure that the flows are coming, especially when you consider that foreign portfolio investment is really low right now, that those flows are coming so that we can have a relatively stable currency. But your thoughts about OMO, because in a sense, that OMO auction system is in the spotlight now as a very, very important, but I'll also say very delicate arena to ensure that we get those flows coming.
Yeah. So first of all, if you're looking at forex inflows, we've seen it decline by, say, about 40% quarter on quarter. For you to get foreign...
That is significant. In fact, that should
it is significant. Yes, it should.
The
but
authorities.
The major thing would be that you need to find a way to switch from hot money to the portfolio guys. You can't...
Foreign direct investment.
You mean to
direct investment.
You can't forever, have high interest rates to continue to attract the hot money portfolio guys.
Obviously.
There's a cost. Like I say to people, if you're issuing OMO at, say, 14-15%, in about 6 years, you double the money. So you're trying to mop up 1 trillion. And 6 years, 7, if you look at compounding,
because of the interest
compounding, yes, that 1 trillion becomes
burden.
2. Then you're saying to yourself, I have 2 trillion I need to manage. Then you go back in again.
And that's an interesting point, because this burden is actually borne by the central bank. The OMO bills are not like your typical treasury bills that are serviced by the government. They're actually serviced by the central bank.
So no, but let's put some context. Look, the total amount, we have $15 billion of that money sitting in the reserves. Bulk of them maturing September, October. Between September and December, you have about 2 trillion maturing. You have to reissue those rates to keep them in, or you pay them down. So let's take the scenario that we have to pay them down, right? So $15 billion goes in, and you add the swaps, right? Your external debt has gone from $10.95 billion in 2015 to $25 billion now. So you go into the Eurobond market again to raise additional money. So basically, you will be borrowing at 9% and the debt burden to export ratio is going to be excruciating. So you will need to look at it broadly and know at what point you can allow those interest rates come down and allow the exchange rate move a little bit, so that you don't actually just choke this economy because you want foreign portfolio investments. There are too many things that we need to do on rails, roads.
You mean foreign portfolio?
Yeah,
Sorry.
we need
foreign portfolio investment.
Yeah,
I thought you meant foreign direct.
No. Foreign direct investment we could live with, but they will still take their dividends at a later date. But that's not a problem.
Absolutely.
The real thing is that you have to decide hot money, and some countries have said, if you bring hot money, the minimum gestation is 3 years.
You can't take your money for a while.
If you are going to take your money before 3 years, keep your hot money there. It happened in Malaysia and everything. It was when Emir Sanusi, when he was governor of Central Bank, lowered this because of this kind of pressures. Now we are addicted.
Sorry to cut in. Do you think that's perhaps the way to go, or should we
think so.
change strategy completely?
No, I'm not saying that that's the way to go. I'm saying that cause and effect. This is what happened. Then you now depend on it. If you allow the interest rates come down to a point where carry trade is not that lucrative, then on its own, it will go away. Then you can then begin to change the rules, because the people that are going to be investing that time will be investing long term. But this addiction you can't get high on your own supply. That's the problem. You got to do something about it.
Yeah, I agree, because you have to, you need the fiscal side to come in, and then like he mentioned, rail and all sorts of infrastructure needs to come in. So we can now reduce our dependence on them and start looking for other means or avenue to generate our own forex. Well, you can't continue this forever. And note that even this system of selling OMO to clients only, it actually creates another
arbitrage.
Yes, because you would see the foreign investors come in, they will buy your OMO bill at 12.25. The local banks can buy. So secondary market is trading at 10. OMO is at 12.25. So they don't buy, they sell to the
because
banks.
they can't regulate that.
And they take their money.
No, you can't.
No, you can't. So if you do that, you can't see. You can regulate FX as much as you want, but globally, the debt guys, the bond guys rule the world. Reason is that every government must borrow. You need debt to survive. If you decide to cut off the guys who provide cash and funding for you, then there's a big problem. The government can borrow. You can manage FX however you want to, but once debt creation for any government becomes a problem, then you have a major crisis, right?
So, what makes you think that the banks cannot even ask foreign companies to
buy for them
and hold it on, in their nominee names and all that?
All sorts of things, yeah.
Any policy or any tax that is difficult to administer, according to Adam Smith, is no tax at all. Forget it. Don't even try.
All right.
And the rates too.
How did you get you in?
It's also important to have a rate that inspires confidence. I'm talking on the foreign exchange market. Because if you continue to have these issues of multiple rates, it also has a way of also, discouraging inflows on the capital side. I mean, he talked about remittances. Of course, remittances is one of the biggest sources of inflows. I mean, we are talking of something in excess of $20 billion. That's quite a lot.
Sure.
And I know that you can even do a lot more. If you are talking of even FDI flows and other flows on the capital account side, the rate must be right. If the rate is right, I think it has a way of also encouraging more inflows into the economy and supporting the supply side, rather than depending perpetually on these portfolio flows.
All right. As we begin to round up, I just want to quickly, across the table, just get your thoughts on concerns around the currency, given what has happened with the meeting, given obviously the signaling from the central bank governor about the direction the bank is going. How concerned are you about currency weakness further this year?
Well, I'm not so concerned. Reason being that, yes, we might see some pressure on the currency, but I can bet 100% that the central bank governor and the whole,
but
they have their eye on it. Whatever it takes, if it means reversing the trend and saying, look, we're no more easing, we're going back to tightening, we'll find a way to manage the story around growth. So you can
bet that they will try to achieve some stability.
I definitely don't see them talking about devaluing or allowing a depreciation happen this year.
But while you're making that point, let me add a scenario that perhaps doesn't look likely today, but
oil at $35, I'm sure.
Maybe not 35, but lower oil. Let's just say lower oil. The trend is lower. It gets foreign investors.
We know Trump wants lower oil.
All of that.
We know the president of the U.S. wants lower oil prices.
You cannot completely rule it out.
No, at that
scenario,
in that scenario, interest rates up,
more
down.
restrictions. You see, you have two options. You either allow the market forces to work, which will give you what we call dynamic equilibrium, or you create a stable disequilibrium, which will be where the gaps will be filled by all sorts of smugglers and all of this kind of thing. So if you are having to grow in a market-driven economy, then you've got to accept certain things.
Are you saying that your position is that it's inevitable we'll see some weakness?
No, and I'm saying that let's dimension it. Assume that the currency goes, right now the PPP is at about 340, 350, so the threat is not that potent. But let's take this other scenario that we allow, say, 5% depreciation in currency, 10, 36 naira, so it goes to 380, 390. And if because of that, the consequence of that is that you have growth go from 2 to 3, or maybe to 4%, you're getting a 50% pickup on the growth side, and you're getting only about 20% of the range, or 15% of the range in terms of the exchange rate. And the market will still clear. And so many things will happen. Investments will come in, and employment will be. So you've got to look at the macro picture, the totality. And if you keep on fixing small bits and pieces, you will never fix the total picture. So we are going to have this discussion 6 months from today, and you'll find that what I'm saying is true.
How concerned are you about the currency?
I want to, before I go to the currency, I must appreciate the steps taken by the CBN concerning the issue of financial intermediation. I'm sure that will have some positive effects generally on financial intermediation role of the banks. And coming to issue of currency, I align myself with what Bismarck said. You know, having this equilibrium, dynamic equilibrium, we call it, is very key. Because the moment you begin to have this misalignment of phrase and pockets of things, it creates a lot of problem. And I must also caution that the approach of the CBN to fixing the real economy is not the right approach. It's creating a lot of, it's disrupting a lot of things. It's disrupting, it's creating distortions. You know, it's bringing a lot of shocks to some investors in this economy.
But I think the interesting thing is that as we begin to bring this to an end, is that I was just thinking before the show that what are the most significant economic policy discussions we've had, say, over the last 3, 4 months, 6 months? It's always around the central bank. It does appear that the central bank, you may criticize them or not, rightly or not, it does appear that there's a burden on the central bank for them to do more because of really slow movement from the fiscal side.
No, that's not true. You see, the reality is that there's monetary policy dominance, fiscal policy recessiveness in gene therapy. The truth is that you take on things and you assume responsibilities which may not be yours. But that interaction, that alignment is going to have to take place. I need to take place shortly.
All right. I really have to end it there. Thank you so much, gentlemen, for joining us today. Of course, that's the end of our coverage of the Nigerian Monetary Policy Committee meeting today. Many thanks to my guest, Nnamdi Nwizu from Comercio. We also have Bismarck Rewane, the CEO at Financial Derivatives, and of course, Muda Yusuf, the Director General of the Lagos Chamber of Commerce and Industries.